Today we will continue sample solutions, Accountancy Cbse syllabus plus 2 standard. Question number 30. Mohit had been allotted for 600 shares by Govinda Limited on pro rata basis. Pro rata basis means 2 shares for every 3 shares applied. He had paid application money rupees 3 and then could not pay the allotment money of rupees 5. First and final call was not yet made by the company. His shares were forfeited. The following entry will be. So the entry is given. The entry will forfeiture entry. So equity share capital we have to cancel. Equity share capital account. So formally it was in credit. So we have to transfer. Forfeiture against forfeiture. So equity share capital account should be debit to share forfeiture. Forfeiture means the amount collected from the customer, that is a benefit to the company. So that is share forfeited account. And then equity share allotment for non-payment of share, allotment money, and the shares 600 shares were forfeited. So how much? For example, 600 shares into 8 rupees, because 8 rupees is a called up value. So 6,000 into 8, 4,800 rupees. It must be debited in terms of equity share capital. We are cancelling 600 shares from the share capital. And then share forfeited. Share forfeited means the amount remitted by our members, shareholders. So here pro rata basis it has been allotted. For every 3 shares, 2 shares were allotted. So how much Mohit has been allotted? 600 shares he has been allotted. So how much he would have been? He would have applied. So cross multiply. Please cross multiply. That is 1800. 600 into 3 divided by 2. That is he has applied 900 shares. So 900 shares he would have given application money. Application money is only 3 rupees per share application money. So he has already remitted 2,900 into 3, that is 2,700 rupees application money he has spent. But he has not paid allotment money. So 2,700 rupees it is a gain to the firm, company. So share forfeiture account should be 2,700. So this amount will be 2,700. For non-payment of share allotment money. Actually, what is the due of allotment money? Actually, 600 shares into 5 rupees, because per share 5 rupees due. So 3,000 rupees he has to pay. 3,000 rupees he has to pay. But he has not paid any amount. But application money he has spent. Actually, extra money. 600 shares allotted. Apply 900 shares. So extra money is there for 300 shares. How much? 3 rupees. So 300 into 3 rupees, that is 900 rupees he has already remitted on along with application money. So how much he has to pay still? The total amount due 3,000. He has already paid along with application 900 rupees. If we deduct 900 rupees, 2,100 he has yet to pay. That is allotment money still he has not paid. So for non-payment of allotment money it has been cancelled, forfeited. So here 2,100 rupees is the non-payment of equity share allotment money. This will be the correct answer. So is there any entry? Equity share capital 4,800 and then shares forfeiture account 2,700. 2,100 is equity share allotment. So C will be the correct answer. The next question, question number 31. There are 2 statements. Assets. In case of shares issued on pro rata basis, excess money received at the time of application can be utilized till allotment only. It is wrong. It is false, because it can be utilized not only on allotment, on first call, on second call, and final call. So it is false. First you have to think it. And the next one is R, reason. The company has to pay interest on calls in advance at 12% per annum for amount adjusted towards calls. In the context of the above 2 statements, which of the following is correct? Okay, so this also correct. For example, calls in advance on if we receive amount. For example, at the time of first call, if we receive the second call money in advance, we have to pay 12% interest. It is according to law. So it is correct. It is true. So answer, there are 4 answers given. The A is false and then R is true. Here both A and R are true, that is wrong. Both A and B are true, that is also wrong. Both A and R are false, that is wrong. A is false, R is true. So D is the correct answer. Question number 32. Question number 32. Ajay and Vinod are partners in the ratio 3:2. Their fixed capital were 3 lakhs and then 4 lakhs respectively. After the close of the accounts for the year, it was observed interest on capital which was agreed. Please understand, it is agreed. Only 5%. But by mistake was erroneously provided at 10%. So 5% extra we paid interest. And then by what amount will Ajay's account be affected? If adjustment entry is to be made, what account? I mean Ajay's account, how much it will be affected if partners decided to pass on adjustment entry? This is an important question, please listen. For example, Ajay and then Vinod. Actually, the interest on capital, how much interest on capital? The 5%. Actually, we have to pay interest on capital 5%. So Ajay's capital is 3 lakhs. So 3 lakhs at 5%, that is 3 lakhs at 5%, 5 by 100, that means 15,000 rupees. We should give only 15,000 rupees. Likewise on 4 lakh, how much we have to pay? 4 lakh into 5 by 100, that is 20,000 we have to pay. Actually, this is the original interest he is eligible for. Both are eligible for 15,000 and 20,000. But by mistake we have given 10%. 10% means 30,000. I mean 10% on 30,000. It will be, I mean 3 lakhs. 10% on 3 lakhs. 30,000 interest we have given by mistake. Here 10% on 4 lakh. So 40,000 given. So we should give only 15,000 and 20,000 interest. Instead, we have given 30,000 and 40,000. So they have obtained extra. Extra how much? 30,000 minus 15,000. That is 15,000 extra. They have received both. Here 40,000 minus 20,000, 20,000 extra. So A has obtained 15,000 extra. B has, I mean V means here Vinod has obtained 20,000 extra. Had we not given this interest on capital, at 10%, this 35,000 would be treated as a profit. Please understand, this 35,000 would be the profit. If the profit is distributed among the partners in the ratio, that is 3:2, so their original share will be, so 35,000 into 3 by 5, 35,000 into 2 by 5. That means 7 times, so 21,000 here, here 14,000. So the profit eligible, if we have done the accounts correctly, the profitable eligible for A 21,000, for V 14,000. But they have obtained the interest 15,000 only. As far as A is concerned, he has obtained interest 15,000. Suppose had we not been given, 50,000 rupees extra, the total profit will be, the share will be 21,000. So he will be the loser. That is 6,000 rupees, loss to A. But he has got our, gain. 14,000, 20,000. So 20,000 rupees he has received. But we should give only 14,000. So 6,000 rupees extra he has get. So he has to surrender. Vinod has to surrender 6,000 rupees to Ajay 6,000 rupees. The account should be, the adjustment entry will be Vinod account debit to Ajay account. How much? 6,000, 6,000. So in the question what is asked, pass an adjustment entry. Ajay's current account will be adjusted by 15,000. It is wrong. Ajay's current account will be credited by 6,000 rupees. So Ajay's current account is to be credited 6,000 rupees. So B is the correct answer. Number 33. Vishnu Limited forfeited 20 shares of rupees 10 each. Rupees 8 called up, on which John had paid application and allotment money rupees 5 per share. That means 20 shares, 5 rupees on application and allotment money, so 100 rupees received. It has been forfeited, 20 shares forfeited. That means this is a forfeiture amount. So share forfeiture amount, forfeiture, how much rupees? 100 for 20 shares. But 15 shares are reissued at the rate of 6. So the forfeiture amount, portion of forfeiture amount for 15 shares. So how much? 15 into 5, that is 75 rupees. So what will be the remaining balance to be transferred to the capital reserve? That is 100 minus 75, that is 25 rupees. So 25 rupees is the balance in the share forfeiture account is to be transferred to the capital reserve. Is there the answer is given? So A is 0, B is 5, C is 25. So 25, C is the correct answer. Number 34. Newfound Limited took over the business of Old Land Limited. Newfound Limited took over business of Old Land Limited and paid for it by issue of 30,000 equity shares of rupees 100 at a par along with 6% preference shares of rupees 1 crore at a premium of 5%. Please understand, premium of 5% and check of rupees 8 lakhs. What was asked in the question? The total purchase consideration we have to find out. What is the purchase consideration? So equity share capital, how much we are paying equity share capital? 30,000 shares into 100 rupees. So equity share capital, that is 30 lakhs. And then preference share capital, that is 1 crore along with the premium 5%. We have to add 5% premium, that is 1 crore 5% means 5 lakhs. So 1 crore 5 lakhs. And then apart from that, in addition to that, a check of rupees 8 lakhs it is given. So down payment check, that is 8 lakhs. So what is the purchase consideration in order to acquire Old Land Limited? How much we spent? 0, 0, 0 and then 8, 13, remaining 1, 4, that is 1 crore 43 lakhs should be the purchase consideration. So is there any answer? A 1,05,000, B 1,43,000. So B is the correct answer. You can neglect it. C 1,40,000 and then 1,35,000. So B is the correct answer.